All right. Hey, what's up, YouTube? So today we had a slow day in the market. We still had a lot of call outs, a lot of good things that happened. And we uploaded a watch list in case you're interested in the stocks that are going to be going tomorrow. So if you're interested in those kind of videos, definitely make sure to follow and subscribe. But today, since we had that lower volume day, I want to take this opportunity to also kind of go back to the market theory kind of things. Anybody who's new and starting, who's been watching or interested in investing but hasn't really gotten into it yet. I want to provide an example of how you can start, minimize risk, or not even have any risk to lose your money at all, and still gain the knowledge. So I think that gaining money is a byproduct of understanding how to use the market to your advantage. So we're going to talk about a little bit of that theory here. So let's see. This to start, this platform is called Webull. It's the one I prefer and I use because it is very simple. And when there's so many things going on in the market alone, not even to speak on the platform itself, you want to start by keeping things simple and adding on to what you know each day. So I like this one. It's very simple. It's very user friendly. So you got the watch list here, your stocks, markets, screeners, trade, account, and paper trading. You don't need to use all that right now. If you're starting, the main ones you're going to focus on are trade, account, and paper trading. Your trade is where you're going to have your real money if you decide to put any in there at the start. Your account is where you're going to have your money. Sorry, your trading is where the actual market is going to be. That's where you're going to go. It's going to look like this. This is a simulator, but you're going to want to look at the real market. You're going to play the real stocks. This is where you're going to deposit your money, take out your money, and kind of monitor your money. Paper trading is the simulator I talked about. This is where we're at. And so you get your charts, you get your buy, your sell, and access to all the stocks and your watch list that you create. So I like this because if you're starting and you want to gain knowledge, you can start here without any investment. It's a simulator. It starts you off with $1 million, but you can change it to whatever amount. You could even restart if you want to restart. But you could treat it like real money. And if you lose money, you don't take any risk. And if you make money, well, now you've kind of seen a pattern that works for you, and you can try and repeat it here. And that's what we're going to be talking about is using the simulator to kind of confirm patterns and your confidence. And then with the money that you do decide to invest, you're going to go and take that. And when you see that same pattern you've been testing, you can try it with a small dollar amount because you are investing real money at that time, but you've gained your skills with the paper trading, which is here, the simulator. So yeah, starting out, you want to make sure you familiarize yourself with this in general. Again, this is called Webull. I have my affiliate link in the description. I believe if you use that link, you get a free stock. I believe I do too. It depends on whatever special they're running, but yeah. So this is called Webull, and you're gonna want to go with the dollar amount that you're comfortable with. It starts you off with $1 million, but I wanted to do something more reasonable. I didn't want to do maybe like $100 in the simulator necessarily, because to me that wouldn't be as enticing. So I wanted to go with an amount that once I get past, I knew I can break out from there in terms of gains. And one thing that I know is that there's something called a pattern day trading rule. And so if you're a beginner trader, basically what the pattern day trading rule is, if you have under $25,000 in your account, you can only trade 3 times per week on a 5-day basis. And if you have above 25,000, you have unlimited day trades. A day trade meaning you can buy and sell within the same day. Swing trade is when you buy one day and you can sell any point past that, the next market day. And to explain a little bit of why that's important, in a day trade, you can buy at these levels when huge volume is coming in and sell any point up here. And that's a huge advantage because you don't have to inherit any risk of after hours, pre-market, or the next day. You've already secured your profits for the day, and you can reset at a new entry point, any other stock, anywhere. Your capital is not tied up or anything like that. Whereas if you were holding it overnight, you could end up with something like this where you're up so much money at one point, but since you can't sell that same day or you decide not to, it can come back down and you can end up in a red day. So one of the worst feelings is when you're up but you can't sell and it comes back down. Now, if you're above $25,000 and you're watching this, you're not going to relate to this too much unless you just decide to hold on your own. But if you're trying to not use a day trade or you're out of day trades for Webull, you might be familiar with this. So, or even if you were a beginner trader, you might be familiar with this. But you inherit more risk by holding overnight as well. So the good thing about a day trade is that you can capitalize on volume or news or anything like that, and you can minimize your downside by getting out before it turns back around on you. And in any case here, so the reason I put 30,000 is to give me a bit of cushion over 25k, and knowing that I have unlimited day trades, I can do this as many times on as many stocks as I want, as long as I have the capital not tied up, and that's what I wanted to practice on. So what I recommend is you want to use this money as if it was your real money. So in other words, if you take a huge loss, you do want to learn from that, understand what went wrong, what you could have done better, what risk didn't you mitigate, and see if that was the best play for you to make. And if you sometimes, because you do lose sometimes, I mean, you're not going to win them all, and sometimes you make the best play possible and it still turns on you. And in those cases, you're going to win the majority of the time, but there are still times where the market doesn't care how good of a setup you have, how good of anything you have, and what pattern it is. It does happen that time sometimes, but you want to set yourself up for success by minimizing the amount of times that would happen. You don't want to jump into anything. You want to kind of start recognizing patterns. And if you're new to this, I highly recommend that you use paper trading, the simulator, because you're not risking real money. You can test your ideas and your patterns, get used to things, and start to become second nature with the market. Really, it's kind of like when you first start driving and you're just trying to get wherever you're trying to go. Whenever you're merging into lanes, going wherever, you're not too comfortable yet, but years later down the road, you can almost get a feel for the road, and you kind of know what other drivers are doing as well. Before another driver cuts you off or does something like that, you can see it coming ahead of time and prepare yourself and kind of avoid that whatever would have happened. Mitigate your risk, essentially. And so you can kind of do that same thing with the stock market, but the way you get better is repetition. The way you learn is repetition, seeing as many patterns as you can, as many days as you can, looking over charts, looking over what certain things happen, how news, volume, certain things influence certain stocks because they all behave differently. Those are all kind of the things you want to do when you first start. And I know a lot of people are antsy when they first start and they want to start making money already. You can definitely do that because the market doesn't care. As long as you have money, you can trade. But at the end of the day, we're making percentages. So if you have $100 you're investing with and you make 10%, you have $10. But if you have $100,000 and you make 10%, you have $1,000. Sorry, $10,000. But yeah, so like it's really a game of numbers, and that's why I see money as a byproduct in the market. Because if you know what you're doing and you know how to get those 10% gains, once you have the money will come. But when we're working with smaller amounts of money, if you make a 10% gain on $100, you might not be satisfied. You might end up holding and it might come back down, something like this. So those are the kind of things you want to look at. You want to start investing with small amounts, kind of just test your ideas, see what works and what doesn't. And the main strategy I have is that you use the simulator to test out your theories. And then when you go into the paper trading, you have a certain small amount you're okay with not tying up. I wouldn't put any kind of money in here that you need to pay bills. Kind of, this is going to be the money that you would be spending or holding, not doing anything with. And you're okay with having it tied up here, whether you lose or make money on it. This is money that you're going to use to make your safest, not risky bets, but nothing is guaranteed in the market. So that's the plan, is that you look at patterns, and then once you see a certain pattern over and over again, like a certain setup, and then you've done it so many times in the simulator that you're comfortable now, and then you see that same setup coming up in the market and you're comfortable, you can go use a day trade or use a swing trade. But at the end of the day, you're learning with the simulation, and then you're testing your ideas with your real money. But when it comes to investing, you really only have to start with anything as little as $1 to a few $100s to start, because you're just trying to get those percentage gains. And if you really want to actually take it to the next level, then you can start. I mean, you can put whatever amount you decide to, but a good amount to work with would be anywhere from $2,000 to $5,000, where you can get really good gains off of. And once you're above 25,000, of course, that's when the unlimited trades come in, and you still want to take those not risky bets. But at the end of the day, if something flops on you, you can get right back out, take a small loss, instead of having to ride this for a whole day and losing a lot of your account. So if you are a beginner trader, just know that you can invest with as little up to $100 or even $0. You can start by just learning. And like I said, money is a byproduct of knowing the market, gaining money at least. So if you want to be into the stock market, you don't need any money to start. You don't need to feel intimidated or that you need to have some kind of investment in here. You can start learning already. And to me, that's crazy because there are very little businesses or any kind of strategies really that have zero kind of barrier to entry. And the stock market is one of them that has really a very little barrier to entry. Really, it's a specific knowledge that coming into here that can help you gain, but you don't need a college degree. You don't need any experience just to start. Of course, once you get here, you want to actually have some experience before you start trading with real money. But as far as the barrier to entry, if you wanted to start a business, the amount of money this can generate, some businesses have more startup costs and still can't produce as much as the stock market can for some people. So if we think about it this way, if you want to start like some kind of restaurant, you have your rent that you need to pay, you need to have the physical property, you need to spend your physical time there, you need to pay for those assets that run the company inside the restaurant, you need to pay for supplies, you need to pay all kinds of bills, you need to pay for the employees, and it's going to take a long time to get all that set up. And at the end of the day, you're not guaranteed any money. So you're inherently starting in the red, whereas the stock market, you don't need probably as big as a barrier to entry to start all those costs. You don't need those one-time startup costs, and you can start making money right away. But you want to make sure that you're coming in with a level head and you understand what you're doing. And this could take months of practice, but at the end of the day, it's totally worth it because the amount of money this can generate for you it's well worth it. I don't see anything that stacks up to it, in all honesty. Investing long term or short term, they're really separate deals, but you can make money in either way. So to kind of go into long term versus short term, long term would be anywhere from swing trading to long term just holding, having a long term position where no matter what happens, you have a certain date where you add more money to your stocks. And this is going to be something kind of not as aggressive as short term, but you're going to be having a stock that you like, as far as like revenue or how big the company is, how the branding is, how they operate, how they respect their customers. If you believe in a company, you're going to be putting money into them and watching it grow over time. This is how like Uber went from like $5 to where it is now. Tesla going up. If people just believe in them and they put their money there, not trying to really time the market, but just adding to it, believing in the company will do the work. That does work. You just got to pick a company that's very stable and that's not going anywhere anytime soon. But you also have the short-term investing where you're getting in by the day and out by in the same day or the next few days, and that works too. Because if there's volume, at the end of the day, there's going to be opportunity, because people are helping you push it up, and you're pushing it up as well by investing. But these are typically companies that you don't know too much about or plan on holding long term. You can be riding the volume on this and then out the next week, never play it again. The company fails, but it doesn't matter because you're already out. Now that would be horrible if the company actually ends up failing, but that's just an example. So yeah, if you have any questions about starting up investing, definitely leave them down in the comments below. I'm going to be reading all the comments, responding to them, also potentially making videos on any questions. But I'm very fresh into this as well, and it's pretty exciting, and there's a lot of opportunities, and I know a lot of us can relate when we say we don't want to work a job for the rest of our lives, and there are plenty of people in the stock market who wake up every day, trade for an hour, make more money than most people make in a week or even a month, and go back to sleep or go to the park or do whatever they want for the rest of the day, stress-free. And if you really enjoy the market, most people stay here all day too. So it's something that has so much opportunity, and it's very fun at the end of the day too, because it's a risk reward, and it's a very nice feeling when you get rewarded by your ideas. It makes you feel like you know what you're doing, which is a good feeling. You don't have like any kind of boss watching over you or anything like that. And I know a lot of us can relate when we say that we would love an opportunity like that. But money is a byproduct. So the market will reward you for having good ideas, and for being patient. But first you need to understand what you're doing. So like all things, it takes time. This is not one thing you can probably learn in one day. This is going to be a thing where you constantly need to show up. It's something like working out, where you can go hard for one day, but you're not going to get equivalent results. You need to show up every single day. And you'd be doing a better job by showing up every single day, doing a little bit, than showing up one day, going all out, and then not ever going back again. This is something that you need to constantly be adding to, constantly be learning, and constantly be adding to your knowledge. So with that being said, if you do follow the channel, I'll be uploading tons of videos. So that that'd be one way to learn. But yeah, hope you guys liked the video. There's probably stuff I left out, but I hope I did a good job in explaining things. These are some of the kind of things that I wondered when I was first starting. But yeah, hopefully I answered a few of you guys' questions, or anybody, if I even helped a few people kind of break the ice. That's for me, that's pretty awesome, because I'm helping kind of start that initial barrier to entry of like breaking the ice and kind of breaking all the fear of like how intimidating this might be, or potentially losing your money. But there are ways to mitigate your risk, not ever destroy your entire savings and stuff like that. And it's really by just controlling your risk, managing your investments, and not biting off more than you can chew. So that's going to be it for this video. I hope you guys enjoyed. If you did like the video, please leave a thumbs up and follow the channel. I'm going to be uploading more videos all the time, almost every day, because I love this. Honestly, I can learn about this every day in different aspects. There's so much to learn about. I'll probably never be done learning about this. So there's always going to be tons to talk about with you guys. So yeah, follow the page, and until next time, guys, I'll see you.